The second quarter began on a positive note, with markets still upbeat from the dovish shift by central banks globally. But that all changed when Donald Trump reignited tariff fears and later shut down imports from many Chinese firms that supply technology to US companies. Tensions later eased in the run-up to the G20 summit in Japan on hopes of a compromise. Closer to home, politics took center stage, with the ANC winning the elections, while our GDP print made some politicians question whether quantitative easing might be the answer to our troubles. Equity markets were somewhat of a roller coaster ride this quarter, with April and June being fairly solid, but May presented more of a challenge on negative news flow, and we saw quite a steep sell-off as a result. Overall though, the market treaded water and South African asset classes performed better than expected, despite weak economic fundamentals. Offshore asset classes were more muted, and the rand posed an additional headwind for them. Global growth has lost steam this year, causing some to question whether we might be at an inflection point in the cycle. Growth is however expected to pick up next year, driven by renewed strength outside of the US and more accommodative monetary policy globally. This preemptive move from central banks to promote growth in a low inflation world will be a dominant theme going forward. Domestic growth suffered its worst quarterly contraction since the global financial crisis. Crippling power cuts were partly to blame for this, in addition to weaker global activity which affected our mining sector. Year on year, the economy has stagnated while growth forecasts are being trimmed at every opportunity. While we remain hopeful, there is little evidence to suggest any meaningful recovery in domestic growth prospects. Our portfolio positioning is broadly unchanged. We continue to position for global economic expansion and weak local prospects. We remain overweight equity, continuing to favor offshore over local, and we find comfort in the fact that valuations are not extreme. We are still underweight global bonds, which offer little compensation for their risk, while we are neutral on South African bonds. For more information on our current thinking, please read the latest edition of Talking Points, available on our website.